Hey everyone, hope everybody's having a good day. It's your instructor Ryan Bradshaw. I know I'm not there, but we're able to leverage technology in order to still present you with a lecture for today. And I want to thank Miss Lindsay Hinkle for taking the time to present this recording to you. Everybody, thank Miss Hinkle. Give her a round of applause for stepping up and helping out today. Thank you, Lindsay. Hope you're well. All right. So what we're going to do today is kind of jump through chapter 4. Chapter 4 talks about the different types of ownership for a company or for businesses. And we're just going to go through as our normal lecture would be presented. I will say that this is going to be broken up into roughly three 15-minute sections. And so as we go through, there'll be a brief pause while Ms. Hinkle pulls up the next video. So the learning outcomes for Chapter 4 include what are the advantages and disadvantages of the sole proprietorship form of business organization. Remember in the past I've talked about that regardless of what decision you're making, there's always some type of benefit and some type of cost. The cost is the thing that you give up in order to get what you chose to go after. And so just like everything else, a sole proprietorship is going to have some benefits to it, and it's going to have some opportunity costs. So we'll talk about that. What are the advantages of operating as a partnership, and what downside risks should partners consider? How does the corporate structure provide advantages and disadvantages to a company? And what are the major type of corporations? What other options for business organizations does a company have in addition to sole proprietorships, partnerships, and corporations? What makes franchising an appropriate form of organization for some type of business? And why does it continue to grow in importance? Why are mergers and acquisitions important to a company's overall growth? And lastly, what current trends will affect the business organization of the future? And so looking at sole proprietorship, a sole proprietorship is defined as a business that is established, owned, and operated, and often financed by one person. Got to move my head around a little bit. And so sole proprietor is what the name says it is, an individual sole proprietor, somebody that owns a business. The awesome thing about sole proprietorships is that you can say, I'm going to be a sole proprietor and start a business today. You don't need any type of special registration, often don't need a special license or permit. In some cases you do, but as an example, let's say I wanted to open up a portable car wash where I go around and wash people's cars in a parking lot at a business. I say I'll go to an office complex. That complex has 200 people working in it, and I just go around and say, if you're interested in my service, these are my rates. I'll come to the organization. I'll wash your car in the parking lot, and when you get off work, it'll be ready for you. And so I don't need any type of special permission, permit, or anything to do that. As a sole proprietor, I will be using my tax information that I already have, my social security number, and file taxes as an individual that earns income as a sole proprietor. I don't offer tax advice or consultation, but generally speaking, that is how a sole proprietorship works. You can have many different types of business, whether you cook and sell baked goods on the side, or have a eBay store or an Etsy store. There's all different types of sole proprietorship. Some people tutor. I had a piano teacher when I was growing up that offered piano lessons, and that was a sole proprietorship. But in some circumstances, you do need a permit or license to operate, especially if you're doing something that requires licensure. Like you just can't open up a barber shop or beauty shop without a specific license. You need to have some type of certification in place in order for the state to know that you're qualified to operate, this type of establishment. So there are some considerations depending on the type of business you want to open, but for the most part, sole proprietorships are easy to open, don't require special permissions, and they do comprise of the largest form of business. Most businesses are sole proprietors. At least they start out that way, and as they grow, if they grow, they add more employees. And so here's a chart from the text that compares numbers. So sole proprietorships comprise of 72% of business. partnerships 10%, and corporations 18%. So we'll see some contrasts here as we develop the chapter, but generally sole proprietors make up the largest chunk of business types, but corporations actually employ the most people and generate the most revenue, even though they're one of the smaller business types. I think it's interesting that partnership is, kind of in the middle as the smallest one. You can see on the sales side how corporations dominate 80% of the sales, and profits, almost 60% of the profits are driven by sole proprietorship. So, and we're going to talk about partnerships and corporations in a moment, but let me talk about some advantages and disadvantages of the sole proprietorship. Advantage is that it's easy and inexpensive to form. Profits all go to the owner. Everything I make is mine. Direct control of the business. I get to decide what the logo looks like, what type of products and services we're offering, what type of marketing we're going to do, what type of customer engagement we're going to do. It's all up to me. Freedom from government regulation. Like I said, there is no special permit or license for the most part, no special taxation. You file any income under your own Social Security number. And then it's ease of dissolution, meaning that if it doesn't work out, generally speaking, you don't have a lot of paperwork that you have to file in order to dissolve or break apart a company. It's just you just say, I'm done, and I'm done. I actually have had a sole proprietor in the past, and it went well for a while. Like I said, I filed, I didn't get a special tax ID or anything. I filed any profits, losses under my own tax ID. And when I was done with it, I just said, I'm not going to sell anything anymore. And therefore, it was just a closed enterprise. So the disadvantages are unlimited liability. This is a big one. And a lot of times when a sole proprietor opens up a business, they don't think about certain things. They do think about the product, service, the logo, the marketing, all those things that come to mind when it comes to opening a business. But they don't often think about two things that are really important. Number one, taxation. Number two, liability. So from a taxation standpoint, if you're a sole proprietor and you're just taking in revenue all year long and you're not cutting aside some for taxes or paying taxes quarterly, when that tax year is done and it's time to file taxes, the government is going to want their cut. And so you've got to account for that. And my advice would be to consult with a tax preparation expert or a tax accountant to help you make sure that you sort through that information correctly. I know Ms. Hinkle appreciates that advice to consult with a tax accountant, because accountants are trained to help you maximize your profits, legally minimize your taxes without doing anything that would be tax evasion. You want to legally pay the minimum taxes that you're required to pay, but you want to make sure that you're paying those taxes, because if you try to evade taxes instead of legally avoiding it, there is a great distinction there. You can legally avoid taxes or try to minimize your tax exposure through a number of legal ways, but if you're wanting to get into a situation where you're evading taxes or trying to illegally not pay your taxes, eventually that can come back to haunt you. And if you ever get audited and they go back multiple years and find issues, yeah, you're looking at fines, penalties, potentially jail time. And so depending on the severity of the circumstances. So the best advice is to do things on the up and up, use professionals to get you get advice from. You don't have to spend thousands of dollars to consult with a tax accountant or some tax preparation specialist. Oftentimes they will have a consultation and give you a very reasonable priced advice and be able to give you that kind of feedback. So just take that advice to heart and follow it. So other disadvantages: difficulty raising capital. If it's just me as an individual, they're going to look at me from my personal credit standpoint. And if I'm a person that has limited credit, it might be hard to get financing for tens of thousands, if not hundreds of thousands of dollars or more to finance my business operation. And so that could be a problem. Limited managerial expertise. If it's just me, I have to rely on my experience alone. I've read Made in America several times by Sam Walton, and one of the secrets to success of Sam Walton's Walmart stores was that he had this mantra of hiring people that were smarter than he was. And so you want to consult with experts and let them lend their advice to you and be able to take that advice. Trouble finding qualified employees, that's a challenge in any business model. I could elaborate, I'm not going to, but it is difficult to find qualified people who are engaged and willing to work hard for your organization. Nobody's going to put as much time and effort into your business as you are, and if you're not engaged in it, if you're not dedicated to it, then it's probably not going to work on the long term. Personal time commitment. When you open a business, it's like having a child. It really is. What I mean by that is a business is a living, breathing organism. It requires food in the form of time, money, resources. It requires attention. You're gonna have customers that are getting up with you. You're gonna have employees that are calling you. You're gonna have people that have supplies and resources getting up with you. People wanting payments, people trying to make payments to you. Technology issues. It's constantly needing things from you. And so money or revenue is the lifeblood of a business. It's the blood and the oxygen. Without revenue coming in the door, your business will quickly suffocate and cease to exist because that money keeps the doors open. And so it requires a time and money commitment. Unstable business life. As a business grows, the more and more demands it's going to have on your time. And if you have other obligations, you might have a full-time job what you're doing with your business. You may have family obligations and having to tend to their own obligations like sporting events and things like that. So business is very much a time-intensive responsibility. And then the losses are the owner's responsibility. So you are taking on that risk. If you have any questions about anything I talk about now or in the future in this presentation, just shoot me an email and we'll talk about it. And I'll follow up in class at our next meeting. Okay, so sole proprietorship we talked about. Partnerships, I'm going to slide myself down here to give you a little bit more viewing room. Partnerships are an association of two or more individuals who agree to operate a business together for profit. Two people or more come together, say we want to have this outcome. We want to create something that's going to lead to profitability. We're going to invest time, resources, money into something. We want this type of output. In a general partnership, all partners share in the management and profit. They co-own the assets and each can act on behalf of the firm. Each partner has an unlimited liability for the business obligations of the firm, meaning that if something happens, the partners are responsible. So there could face yourself to legal exposure if something happens and there's a injury or bad circumstance that pops up. Somebody's injured, somebody's killed. There could be legal exposure to you personally as a partner. A limited partnership has two types of partners. One or more general partners who have unlimited liability, and one or more limited partners whose liability is limited to the amount of their investment, meaning that, let's say myself and another party say we're going to come in and create a business, but we solicit a third partner to bring in outside investment. That third partner is going to put up money. They put up, let's say, $100,000. That is the limit to their exposure. They're a limited partner, meaning that they're not going to be limited to any of the actions the company performs. They're not going to be exposed to any of those actions, meaning that if the company has an illness, injury, death, something like that, or other issue that pops up, that is the managing partner's or general partner's responsibility. The limited partner or the investor merely is there seeking a financial return and is not really going to be involved in the day-to-day operation and management of that organization. In the return for limited liability, limited partners agree not to take part in the day-to-day management of the firm. They help to finance the business, but general partners maintain operational control. So some advantages of this. The advantage, ease of formation, availability of capital, you can get more access to money, diversity of skills and expertise, flexibility, no special taxes once again, relative freedom from government control. Some disadvantages, once again, we have that unlimited liability. Potential for conflicts between partners. If you think that you can open a business with a friend or family member and there's not going to be conflict, let me tell you from experience, when you bring money into it, there is going to be conflicts. So unless you're just a very agreeable person, there is very much a chance for conflicts. But some people make it work, some people run into conflict. Complexity of profit sharing, difficult exiting or dissolving partners. I'm going to take a time out here and then we're going to pick it up in part 2. So hang on one second.